JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 23rd of July 2020. So yep, welcome everyone. Welcome to this Thursday's morning live session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now then, let's have a look at what's happening here globally in terms of the coronavirus. And as we have seen that we had a surge yesterday, and we had a new high, a new all-time high in terms of daily cases, total daily infections, mainly coming from the US and Brazil. And so yep, of course, this is not really looking good for the whole kind of global community, but it is how it is, guys. For now, it is a little bit on the difficult side. Unfortunately, this chart here, this graph is moving in with an exponential pace here. So of course, let's see if this can actually go down. As you can see, if we evaluate the pattern here, for example, we can see that after each spike we have a bit of a decline, yep, now I mean it will be interesting to see if we can get a decline. So how far will it be? I mean, because at the moment you can see that we can even actually apply technical analysis here on this little graph. We can see that it's trading above this kind of little short-term upside support line here, but again, imaginary, of course. But yeah, unfortunately that's the case, guys. For now everything's kind of looking really bad, so hopefully this can get fixed, but for now I hope you all stay safe. Now jumping into the charts, and let's see what's happening there. So the first one I want to touch on here is the Nikkei 225. So the index today kind of closed slightly in the red. Yesterday I talked about this index, and basically I was saying that in order for us to get a little bit more excited about higher levels, we need to see a nice good push above the high of last week near the 22,965 zone. But as you can see, we didn't really get that. Instead we got a drift lower, but from the positive side is that the price still remained above this this upside support line taken from the low the 15th of June. For now we will probably take a bit of a cautiously bullish approach, because as we can see that yes, the price is still hanging above this upside support line, but we need that confirmation break above the high of last week first before examining larger extensions to the upside. For now it is where it is, guys, and probably stay a little bit on the careful side. Let's wait for that confirmation break, because as you can see, it is struggling to overcome this highest point of last week. Now Shanghai Composite, quick update here. So the index is slightly in the red, but as you can see, the bulls are really trying it hard to kind of get this one back above the 3,336 territory. I talked about this level, and I keep talking about this level for well, as well, basically in almost every video where I'm covering the Shanghai Composite. But basically the situation here is that yesterday we had a nice push above this barrier, but we got a daily close below it, and today, yes, today we kind of drifted back down, but we still remain in between these two levels, between the 3,288 zone, which is the highest point of 2019, and this 3,336 territory, which is the highest point of March of 2011, if I'm not mistaken. Sorry, not 11, 18. I do apologize. So the highest point of March 2018. Yep, as still the same kind of game plan remains. We need to see a nice daily close above this barrier in order to kind of aim for some higher levels. Until then, it's just not doing anything here. I mean, it's just kind of flirting with these two areas. We keep getting these overshoots, but yeah, for now it's a little bit difficult here. We need to see the clear kind of directional move here. So if basically we get a nice daily close above this barrier, then yes, we could aim for some higher levels, maybe going back to these current highest points of July, which were reached here on the 9th and the 13th. Or we need to see a drop back below the 3,288 zone. However, looking at this picture now, in order to, let's say, consider slightly lower areas here, preferably we would like to see a daily close below the 21-day EMA, because as you can see, it acted as a very nice area of support recently. Now jumping into the German DAX. The German DAX yesterday closed in the red, slightly in the red, but yep, for now basically we're still keeping an eye on this barrier, the 13,236 zone, marked by the high of the 24th of February. And in a way, I mean, what I was saying yesterday, that we need to see a nice good kind of pop above it, and also a daily close above that area in order to get a little bit more excited with higher levels. The idea that I was mentioning yesterday, that in a way given that we are still trading above this upside support line taken from the low of the 19th of March, and in a way the index could drift a little bit lower, but in a way, if it finds support somewhere near the 12,913 zone here, and it could reverse and push higher again. Looking at the cash index right now, we can see that the price is already above yesterday's close, so that's a good sign. However, it's still below this barrier, the one that I was talking about, the 13,236 zone. So yes, the fact that we are above on the cash index, we are above the yesterday's close, that's great, but we need that confirmation break above the 13,236 level. Now silver took the kind of the spotlight yesterday, and look at these beautiful moves here over the past couple of days. So basically it started off on Monday when it overcame the previous highest point of this year, or should I say actually even it overcame the highest point of 2019. There we go, that's probably more accurate. And it moved higher, and it continued to accelerate further. Found support yesterday, found support near the 23.05 level, and today we had a bit of an overshoot, but right now the commodity is correcting a little bit lower. Now, and don't get me wrong, for now, in a way, we could see this one maybe drifting a little bit lower here, correcting to the downside. It is a healthy, nice correction, and if we grab a Fibonacci here, we can see that if we capture this little swing from the start of the uprise, this little short-term uprise up until here, we can see that, for example, the 22.22 area, roughly around here, could be that nice 23.6% retracement on the Fibonacci, which could provide a bit of support. So we'll keep an eye on this one. We'll see if it actually goes here. If it does, then yep, that's going to be wonderful to see if it actually rebounds from here and makes its way up to the it makes its way up again. But for those who are more on the cautious side, in a way, what you could do here is probably wait for maybe a push above the one moment, just a second. it's still lagging a little bit. So you could wait, for example, a push above the recent high and today's high as well, which was reached on which was hit near the 23.25 level. So a nice good push above that would confirm a forthcoming higher high, and more buyers could join in. So, but again, for now, given that we're seeing a bit of a correction, some correction activity here, let's see if the commodity drifts further south, and let's see if actually reaches this this 23.6% retracement on the Fibonacci. If we draw it from the Friday's low, since I mean when it started reversing back to the upside again and taking up to this peak that we saw here today. So again, this, of course, this Fibonacci might get adjusted, but at the moment, at this point in time, that's how it looks. So let's, like I said, let's see if we actually get a test of this 22.22 territory, marked near the 23.6% retracement on the Fibonacci. Now, Brent Oil. Now this one is a Brent Oil, and let me just update this. As you can see, it has shifted already, so I haven't looked at this one for quite a while, but basically, long story short, we finally managed to get this break above the 43.40 zone. I talked a lot about this level over back in a few weeks ago, and the fact that we managed to get a nice daily close on Monday here, I'm sorry, on Tuesday, that was great. Of course, yes, increased the chances for this one to drift higher. But what I was mentioning previously was that, in a way, yes, we could aim for some higher levels here, but be very careful near this level here, near the 45.20 territory, which is marked by the low of the 6th of March, and slightly, just fractionally above it, we do have this 200-day EMA, which also could provide a bit of resistance. So in a way, guys, yes, the fact that we are balancing above this barrier here, above the 43.40 zone, that's great, good news, but we would like to see a nice, good, like I said, push further north. Of course, I mean that's kind of this could be a more realistic option. Of course, we'll be very careful near this level, near the 45.20 zone, and near this 200-day EMA. But don't get me wrong, if it gets overshot, then of course the next potential target is the low of the 2nd of March near the 48.42 zone. But again, first we would need to see this commodity kind of breaking these two key area of resistances, this 45.20 zone and the 200-day EMA. For now, these are our main targets from the very short-term perspective. In case the price starts suddenly falling lower sharply, now let me just adjust this level. What we're going to do here is we're going to keep an eye on something like this here, the low of the 17th of July marked near the 42.40 zone, so approximately around here. A drop below this could let's say open the door towards slightly lower levels, because especially if we get a daily close below this, because we would see the daily candle staying below this 21-day EMA, which, as you can see, recently kind of acted as a very nice area of support. So if we get a nice daily close below this, well, I mean, lower levels could be met, and of course then we could start considering these areas around the 39.50 zone, or even the 36.96 level. But again, we'll get to that. First, for now, we are leaning a little bit more to the upside towards this 200-day EMA. Now, Bitcoin, finally we had a nice break and a most important, a daily close above this downside line here. So that's great news. Of course, this downside line I've mentioned before, this one's taken from the highest point of December 2017. So look at this move, great news for more buyers. If the price continues to balance above this downside line, then yes, of course, we will aim for some higher levels. But don't get me wrong, as I mentioned in the beginning of this week, yes, we will aim for some higher levels, but we'll be very careful near this key levels of resistance. So the first one to watch here could be this one. Let me just mark this one on the chart. The 22nd of June high near the 9,795 zones. We're very close to that level. This could be our target for now. If we get an overshoot here, then yes. If we get a nice push above it, then the next target is of course that psychological 10,000 territory, or this 10,012 mark, which is the high of the 10th of June. Then of course we'll take it from there. Overall, if this this crypto starts pushing above the highest point of June here near the 10,398, then of course we could get a little bit more comfortable with higher levels, because such a move would confirm a forthcoming high. Yep, it could open the door towards larger extensions to the upside. Slightly above it, as you can see, we do have this other little obstacle here, the highest point of February, or in other words the current highest point of this year near the 10,491 zone. So basically, in other words, a nice good pop above it could also spark more interest among new buyers. I do understand it's quite a lot of move here, but again, for now, that's why I'm saying that this is something for later on. So this is, let me just probably quickly mark this one for our future reference. So this is, like I said, something that we're gonna keep in our minds for later, but for now guys, yes, aim for some higher levels, the next potential target here could be the high of the 22nd of June here near the 9,795 zone. In case this suddenly starts sharply dropping back below this downside line, we'll take a bit of a neutral stand again here, and we'll, until it's kind of gonna be stuck here in between these two lines, we're gonna take will remain neutral. If it starts breaking this upside line, the short-term upside support line taken from the low of the 30th of April, then we'll consider maybe a bit of larger extensions here to the downside. But again, for now, the downside scenario seems to be slightly off the table. Now, NZDJPY, and as you can see, also I haven't looked at this one for quite a while, but first of all, it worked out nicely here. Last time I looked at it in the end of May, so yep, it traveled further north. The pair then kind of found resistance near this barrier right here, near the 71.67 territory, approximately around there. It is testing that area today already, but before that we had a decline here. You can see that the pair drifted lower, found beautiful support near the 68.07 territory, which is marked by the high of the 3rd of March, and then and by the way, the highest point of March as well, and then kind of started pushing to the upside again. For now the pair is now very close, like I said, to this highest point of June. So let's see if it can overcome it. If it can, this would confirm a forthcoming higher high. And let me just recycle one of these lines, and then we could aim for the high of the 15th of January. Oh, sorry, not 15th of January, but probably more of a 16th of January, near the 73.35 mark, somewhere around there. And then of course we do have this other obstacle, and let me just grab a line very quickly. There we go, right here, the highest point of December 2019, and that's near the 73.54 zone. So basically, good potential target, very strong resistance, but we need to see a nice good strong move above this barrier first, above this highest point of June near the 71.67 zone, and then we could consider some higher levels. In terms of the downside, now here, by the way, let me just quickly grab this highlighted area, and I'm gonna reuse it right here, because that's going to be the more important one, the more important level to watch. And yep, there we go. Sorry, it's a little bit lagging here, my system. And yep, of course, with the downside, in order to aim for maybe some lower levels again, then a break of this little short-term upside support line here, taken from the low of the 22nd of June. This is what we would need to see in order to aim for some lower levels. At the same time, we would like to see a drop below the 21-day EMA in order to get a little bit more excited. But again, for now, it seems that the downside could be slightly off the table. In AUDNZD, another interesting one, and this one here I talked about in the beginning of this week, and basically I was waiting for a pop up of the 1.0675 territory. So I managed to get that, as you can see. Then I was telling you that my next target is around here, near the 1.0755, 56 territory, roughly around here, which got tested yesterday. This is the high of the 24th of June, and sorry, not yesterday. It wasn't tested yesterday. It was tested on Tuesday, and now we're seeing that this barrier continues to provide resistance, and we're seeing a bit of a correction to the downside. Now, don't get me wrong, this pair might correct a little bit lower here. We'll keep a close eye on this 1.0675 territory, which previously was seen as a good area of resistance. Now it can take a role of potential support, and yep, for now, basically, guys, for now, we will be very careful here, because again, still the outlook remains somewhat positive, especially if we get a break above the 1.0756 territory here, this key area of resistance. If so, then the next target for us is the highest point of June, near the 1.0880. Now, in terms of USDCAD, very quickly here, so just a quick update. To be honest, I'm not going to spend too much time on this one, because I talked about this one yesterday, and what I was saying, that in a way a drop below the 1.3488 territory could do the trick here for more sellers, and the next target for us could be that lowest point of June here, near the 1.3314. This is where the pair seems to be heading towards for now, at the moment. So like I said, that's what I'm going to continue aiming for. If we do reach this level, then I'll reevaluate this again, and I'll see what it can do further. If it drops below this and we get a nice daily close below this level, below the lowest point of June, then yes, of course, further declines are possible. Levels, the next potential target there could be the low of 21st of February, near the 1.3202 zone. But again, we'll get to that if we see a nice daily close below this lowest point of June. For now, that's just the target for now, from the very short-term perspective. Now, in case of GBPUSD, so this one is a little bit on the tricky side. On one hand, the pound has been showing some resilience, and has been kind of moving higher against some other currencies, like for example the US dollar, but against the NZD dollar here, it continues to drift lower. Yesterday, as you can see, I spoke about this pair previously, and I was mentioning this level right here, the lowest point of September 2019, which could be a nice area of support. And yesterday it hit that level. It dropped lower sharply, but found support near this lowest point of September 2019. So now, looking at this picture, although it is looking a little bit more bearish, still, probably to get a little bit more excited with lower areas, we would prefer to wait for that drop below this key area of 1.8997 territory, or in a way you could round it up just to the 1.90 zone. So a nice good drop, a strong move below the psychological 190 zone could open the door towards further declines, guys. So that's why I'd be very careful for now here. Even with the upside, I mean, don't get me wrong, this would be it would be interesting to see this one, let's say for example, rebounding here and making its way up again, but to be on the safe side with the upside, probably we'll wait for a push somewhere above this barrier, above the 1.9322 zone, and then we could then aim for some higher levels. Until then, guys, it's yeah, it's a little bit on the tricky side, so that's why we'll stick to the downside, and but again, for the downside, we need to see that confirmation break below the 1.90 territory. And finally, EURUSD. So this one continues to climb higher. So yep, as I've mentioned before, the next target for us is the 1.1621 territory, marked by the let me just quickly grab this one here, marked by the highest point of October 2018. So we're not far from there. We managed to overcome the highest point of 2019 in general yesterday. That was the 1.1570 zone. And yep, and today we're seeing a further move north. So yep, like I said, we'll continue targeting the upside. For now, the main target is the 1.1621, the highest point of October 2018. Let's see how it performs around there, and if it gets a hold up somewhere here, maybe we could see that maybe that correction to the downside. However, for now, it's not really indicating any reversal. It's not giving us any indication of a reversal, but yeah, at the moment, don't get me wrong, at some point it will come, but for now we are still leaning towards the upsides, and we're aiming for that 1.1620 sorry, 1.1621 zone. So keep your eyes on that one. If by any chance this pair starts moving lower here and drops back below somewhere, maybe starts falling below the 1.1530 sorry, 1.1540 zone, somewhere around here, and that's marked by the high of 21st of July. Maybe we could see a bit of a correction here to the downside, but again, for now, let's wait for that kind of correction signal, and then kind of examine the possible move further down. But again, for now, it's just one-way traffic to the upside. So guys, I really hope you found it useful, and thank you very much for watching and listening. Like I said, I really appreciate your time. I really appreciate you kind of watching this till the end. If you want to catch my video later on, my trader's tea time is always 13:15 GMT. But for now, guys, thank you very much, and have a wonderful trading day. Bye bye.